Traders brace for a possible chill to the November jobs report. In today's cover story, the new edge to the fight for 15 wage war. Plus, an entrepreneur puts an exotic spin on beef jerky. And in Traders Unplugged, why spelling suddenly matters when selecting stocks. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Friday, December 5th, and our first look, jobs jitters. Stocks pulled away from record highs going into the labor report for November due out this morning. It's expected 230,000 people were added to payrolls last month, and the unemployment rate remains unchanged at 5.8%. Fill in the gap. The clothing retailer reported a surprising 6% rise in comp sales for November. Shares soared 4% after the bell last night. Also making a beautiful move, shares of cosmetics retailer Ulta up 4.5% after the close on strong earnings. And Tribune Media makes news on Wall Street. Back from bankruptcy, Tribune trades today on the New York Stock Exchange. Trader Bob Iacchino of Tethys Partners joins us on this Friday morning. Hello, Bob. Care to take a jab at the jobs number? Is the market indicating anything at all about what to expect?
Good morning, Angie. I think it's indicating a little bit of nervousness, yet President Obama talking about jobs early in the week, which he doesn't normally do until after the number. ADP a little bit weaker, jobless claims a little bit better. I think we're probably going to have a miss on this particular number.
Promises, promises. Mario Draghi of the ECB keeps saying he's going to put some stimulus into the Eurozone, but when, Bob?
He has jawboned the euro down by promising these things and never doing anything. Talking about January now, ECB Council preparing a package for him to look at. Still don't think he'll do it. I still think he needs to.
What is your outlook on oil?
Oil's interesting. I think we can have another $4 to $5 lower in oil, and then I think it'll stabilize. Saudi Arabia is not targeting U.S. shale. They're targeting the non-conforming members of OPEC. That happens to have U.S. shale in their sights as well, almost coincidentally. So I think lower from here.
Thank you, Bob, and have a great trading day.
Thank you. You too.
Chuck Coppola is on the labor front for us this morning. Hello, Chuck.
Angie, in our cover story, in the 2 years since efforts to unionize minimum wage workers and raise their pay, dubbed the Fight for 15, began, 3 cities have passed proposals raising it to $15. Many more have stopped short, including Chicago, which saw another in a series of one-day strikes that have taken place on behalf of workers' rights. About 200 demonstrators marched through downtown Chicago, one of dozens of strikes in cities across the U.S., marking the 2-year anniversary fast food workers in New York walked off their jobs. In Chicago, the protesters hopscotched across the city in buses rented by the Service Employees International Union, which has been a supportive presence throughout the Fight for 15's activism. Is this more about joining a union than it is about $15 an hour?
It's about both. Our demands are $15 an hour and the right to have a union.
But isn't the union bankrolling this? Isn't the union providing the buses?
We get sponsors in support and solidarity because they know that with the union, the workers are protected.
The march happened just 2 days after Chicago's City Council voted to raise the minimum wage to $10 an hour as of July 1st. Which will then gradually increase to $13 an hour by 2019.
We need an immediate change. The thought of them just putting it on their mind that it's being out there is bringing awareness. So that's the only difference that's being made.
The pay raise approved will affect some 400,000 employees, including convenience store clerks, airport workers, and employees who've recently joined the push for higher wages, home care providers.
The need for home care workers is going to double in the next 8 years. And if the salary stays at $10 an hour, the workforce will not be there.
So far, the cities of Seattle and SeaTac, Washington, and San Francisco have raised their minimums to $15, along with hotel and school workers in Los Angeles, housing authority workers in Portland, Oregon, and hospital workers in Baltimore and Boston. In the last 2 years, organizers of the Fight for 15 estimate more than 7.5 million low-wage workers have gotten pay raises stemming from ballot measures and state legislation to do so.
A fight for top talent is about to break out. It's happening as the pool of skilled workers shrinks.
Well, the job cuts are very light. Companies just aren't letting many people go. Most of the separations that are occurring now are less because companies are laying people off and more because people are quitting of their own volition and going to new jobs.
The latest report by career coaching firm Challenger Gray and Christmas shows companies are on track for the year to make the fewest job cuts since 1997. The number of planned layoffs fell to around 35,000 in November, down 30% from October. John Challenger says employers are challenged to find skilled machinists, welders, and truckers.
We're number 2. That's right. America, for the first time since Ulysses S. Grant was president, is no longer the leading economic powerhouse in the world. China now ranks first. That's according to the International Monetary Fund. China is set to produce $17.6 trillion in economic output for 2014. The U.S. trailing behind at $17.4 trillion. Yesterday, President Obama addressed concerns over China at a Q&A session with U.S. business leaders.
We've got an integrated world economy, and the two largest economies in the world have to have an effective relationship together. It can be a win-win for both sides, but there's some things we need them to fix.
The president contends that he is pushing China to curb a stream of cyber attacks plaguing the U.S.
President Obama travels to Tennessee next Tuesday to deliver a speech on immigration. Nashville is home to one of the fastest growing immigrant populations. The speech follows the president's executive order to provide temporary legal status and work permits to 5 million immigrants. House Republicans passed a bill yesterday seeking to block the president's order. Also, the Obamas and Vice President Biden attended a summit on college opportunity yesterday. They introduced 600 new programs to help more students obtain a higher education. The evening was capped off with the traditional lighting of the national Christmas tree.
Gas prices could be headed to the $2 mark as a national average. In at least one Oklahoma City station, prices have dropped to below $2 a gallon. By this weekend, GasBuddy.com predicts those prices could trickle to Virginia, Missouri, South Carolina, Texas, and possibly New Mexico.
Consumers are more likely to see gas priced below $2.50 a gallon than they are above $3 per gallon. And 6 months ago, I don't think we would have foreseen that.
The national average fell this week to $2.74 for a gallon of unleaded. AAA says consumers are collectively saving around $200 million per day compared to a year ago.
The people who own Uber are charged up about the startup's latest cash infusion. The ride-sharing company raised another $1.2 billion in financing, bringing its total to more than $2 billion. The latest round places Uber's valuation at $40 billion. It's welcome news following Uber's recent bumps in the road, including unhappy drivers.
A new contract sparks a surge in Plug Power stock. Plug Power, which makes hydrogen fuel cells, has inked a deal for $20 million with Relion, a fuel cell provider to telecommunications, railways, and utilities. Plug Power shares charged upward 5% yesterday, closing at $3.70.
Amazon is going for a rash of business. The e-tailer is out with its own line of diapers and baby wipes. The brand will be available only to customers who are Amazon Prime members. Analysts view it as direct competition to Huggies and Pampers, already sold on Amazon.com. Amazon shares have tuckered out this week, breaking key technical levels, closing last at $316.
And Amazon and Procter & Gamble want you to take a bathroom shopping break. The two companies are rolling out so-called stall malls in public restrooms. An ad on the back of the door directs consumers to Amazon, where they can scan barcodes from their smartphone while they sit and receive coupons for P&G's products. P&G's stock has been creeping higher this year and is currently trading at $90.58.
In our earnings watch, Aeropostale is certain to be on the radar screens of traders and investors today. That stock plunged 22% Thursday after posting a disappointing outlook. Sears lost about $500,000 in the third quarter, making it the 10th consecutive quarterly loss. However, the company reports having enough cash on hand to meet its obligations. Sears will close 235 underperforming stores. The stock sold off by 4% yesterday. Kroger has shares flying off the shelf. The company's third quarter earnings rose 21% on strong sales. The stock gained 3% yesterday, and it's up almost 50% for the year.
It's the end for a partnership between Microsoft and Barnes & Noble. Barnes & Noble is buying out Microsoft's stake in its e-reader business for $125 million. This step will allow Barnes & Noble to split into two separate public companies. Barnes & Noble plans to split its Nook business from its bookstore business by the end of August 2015.
Kodak is having a moment. The iconic company, formerly known best for its cameras and film, is attempting to get a better business click by focusing on 5 business divisions. The divisions will be print systems, enterprise inject systems, micro 3D printing and packaging, software and solutions, as well as consumer and film. Well, traders will get a better picture of the economy today. Coming out, the non-farm payrolls, the unemployment rate, hourly earnings, average work week, trade balance, factory orders, and consumer credit. And on the earnings calendar, it's Big Lots. Still to come, does alphabetical order matter when it comes to stock picking? Plus, the store struggling to keep up with the demand this holiday season because of one hot item. And the taste of the booming beef jerky business is all ahead.
Stimulating news for Starbucks investors. The coffee chain that wants to see you before work in the morning now wants to be your one-stop shop for beer, wine, and evening snacks on your way home. Starbucks plan to get you coming and going as part of an ambitious 5-year growth strategy to reflect consumers shopping more on the internet and less at brick-and-mortar stores. Starbucks projects annual revenue of $30 billion by 2019. It closed up 1% at $81.31.
Big demand is kicking in for LL Bean boots. The company out of Maine says some styles are on back order until February. LL Bean is hiring 100 workers and buying new equipment just to keep up. Stitching operations will go 24/7 this weekend, according to CNBC. The boots that sell for $109 on the LL Bean website were going for upwards of $200 on eBay. Bill Mahler joins me now with a beefy interview.
Hey, you tired working for the man? You know, the economy keeps improving. More and more people are leaving their jobs to kind of do their own thing. Well, franchising is a popular career option. You can run an ice cream shop, a lawn care service, or, well, one of the hottest franchises right now. It's one that might surprise you. Beef jerky. That's right. The Beef Jerky Outlet. 34 stores up and running, another 36 opening soon. The concept won the Entrepreneur Top 500 franchise for 2014. Growth rate about 15% over the last year. Let's talk to Paul Lyons, one of the founders of the Beef Jerky Outlet. And Paul, not just beef jerky, but kind of exotic, almost artisanal jerky, it seems.
Yeah, that's exactly right. We have a host of different flavors and varieties that we have in our stores. Beef Jerky Outlet stores carry flavors that are from wild to mild.
Kangaroo flavored, alligator, elk, ostrich. Well, how many varieties do you have?
Yeah, it's not kangaroo flavored or any of that. It is actually kangaroo. We have over 200 different varieties and sizes of beef and other types of jerky.
Oh, I wonder where your deliveries come from. So many different kinds of meats. How did the concept come to you, Paul?
Well, it wasn't just me. Myself and my partner, we're both running successful stores about the mid-2000s, and we thought, hey, this will work a lot of different places, so we decided to franchise it.
How do you know how to turn it into a franchise? That must have been an exercise unto itself.
Well, certainly it's a learning curve, and there's a lot of things we're involved in getting the Beef Jerky Outlet franchise going. But it just like anything else, you stick to it and you learn it, and you keep making it better every day. That's what we're all about.
And I guess the growth has to come in people who've never tried beef jerky. I've never tried beef jerky. It's that thing you see on the cash register by the Quickie Mart. I was never moved to. But is that where the market growth is coming from? People who've never had it before?
Well, there's certainly a large part of the market in our Beef Jerky Outlet stores is all about people who haven't tried it before. But usually it's a matter of the people who are big fans already coming in and bringing those people with them saying, try this. You don't know what you're missing. And sure enough, new fans are born every day.
All right. What's your favorite flavor, Paul?
Mine, probably cherry maple, which is kind of an exotic flavor we have, which you wouldn't think would be associated with meat products, but it's really good.
All right. Well, you kind of sold me right there. Paul Lyons, thanks so much.
Thank you.
Coming up, the surprising move in a teen retail stock has traders getting hip to Abercrombie & Fitch. And in Traders Unplugged, the guys get a case of sugar shock on Coke and Hershey's. The blood sugar rush is still ahead. Keeping it real on this Friday, Alan Uckman and Scott Shellady are here for Traders Unplugged. Good morning, guys. Ready to go for a few rounds? Round one, snow for sale. Similar to a derivatives play, a Buick dealer promises a full refund to new car buyers if it snows more than 6 inches on Christmas Day in Chicago. What car stock is a buy, sell, or hold?
Well, first off, that's a great hedge because it's never happened. Not to say it couldn't happen, but mathematically, odds are on his side, and he has the protection with that insurance contract there. But I like autos, believe it or not. Bullish. You know what will be the catalyst? Low fuel prices. People feel good about getting a car when they don't have to spend as much on gas.
You got to have a job to buy a car, Alan, and that goes back to the economy.
Employment rate continues to
go
down.
In that whole scenario, taking a look at the car dealer and his idea, I'd like to be the guy that sells him the insurance for that whole deal. That's what I want to be. So I want to sell the insurance for the 6 inches.
I wonder how many people
Christmas
bought
Day.
those cars. But as far as investment plays go, Ford, GM both look good. Tesla's finding some support at 225 here. I don't believe in Tesla necessarily, but from a technical standpoint, it's got a lot more upside here than downside.
Nothing's got downside, Alan. Nothing.
Round 2, chocolate milk. Hershey is switching to sugar from corn syrup, and Coke is going into the premium milk business. What's the better stock to buy?
This is all you.
I'm not an expert, but I did look at the technicals and the charts, and I think scourge is the modern day downfall of humanity. Sugar is the modern day downfall of humanity. So that's been something that's been difficult. I looked at everything, and I thought, you know what? Between the two, I'm going to go with Hershey because I think that we're going to have a cocoa problem, and they'll be able to make some money on the shortage of cocoa.
They could raise their prices and then never lower them again,
faster,
like the coffee
faster
company?
than the cocoa's going up. They'll be able to raise their prices. I think
but
that's
what do you
going to
think
be the
about
play.
going into the milk business now? Coca-Cola going into milk, isn't that a little silly? But then again, people thought it was silly when they went into the water business.
Yeah,
so.
but I bet you drink Sunny Delight, too, so the orange juice people think that's crazy as well.
Coca-Cola has a near-term
Remember
target
Orange
at
Tang?
50, which is about another 10% higher. But Hershey's, it looks like technically wants to make a retracement back to that high at 108.
Round 3, the ABCs of stocks. A study shows stocks with letters in the beginning of the alphabet are more valuable. But are there any WXYZs for YOU?
Well, it's the Michael Jackson of trading theory. For whatever reason, people prefer stocks that have first letters in the alphabet. Michael Jackson, ABC, get it? So, but there are stocks regardless of the letter, but I just was amazed at that study. Maybe people have a short attention span and they can't get to the bottom of the list and they just want to go with stocks like an Apple as opposed to something like Zynga or Zillow.
I think that will change over time because there was in the research an idea
in the
that
books?
maybe because you're going through the phone book, but now that we've gotten rid of a lot of that paper, I don't know if that's going to still be the case.
AAA auto insurance?
So ask the 10-year-olds of today if they're going to be investing, say, more in Zynga rather than Apple, because I think ultimately when we get rid of all that paper, that might change. That 6% premium will change.
Alcoa got kicked out of the Dow and it's one of the best performing stocks.
There you go.
In your bonus round question today, there are only 2 letters in the alphabet that are not assigned to a stock. What are those letters? J, U, O, or R?
O and U.
Scott?
U, I don't know about O.
I'm taking as U.
Yeah.
The answer is J, as well as U. You were kind of right. Thanks for coming on the show. First Business continues right after this. Talking about those teen retailers. Joining us now is Tim Bingham of Trading Block. How you doing, Tim? It's been a while.
It has been a while, Angie. Doing great, thanks.
Good to have you here. Let's talk about Abercrombie & Fitch. Investors were wild for the stock post earnings that were not that great. What's your take?
Yeah, absolutely, and that's the kind of price action from a trader's perspective I like to see. On Wednesday they came out, and had an earnings beat by a penny, but guidance was really, really weak. Stock opened lower. Big put sellers came into position, being in essence buyers at lower level. Stock rallied from there. So I kind of like that price action following earnings on Wednesday. Certainly yesterday had some consolidation of the gains, but kind of like the stock going forward. It's been a big underperformer, not only to the market, but the retail sector generally. So kind of like it from a valuation standpoint here as well.
What would be your price target on this stock?
Really looking on any of these kind of names about 5 to 7% higher from these levels here, certainly looking to take money off the table, given the fact that I think the market may be coming into a tough stretch going forward as well.
Answer me this, too, because when you see earnings with a murky forecast, there was a big downgrade on that forecast, by the way, and then people are buying the stock. What does that tell you? Who's behind this? Is it just a trader play here where somebody could get stuck at the bottom?
It's more of, I think, a washout on the stock. So, the stock had been sold off sharply in front of that. So even though they guided lower, it really wasn't as bad as maybe a lot of the traders and institutions have been playing for. Certainly that kind of price action kind of hints at a washout maybe on the share price that, things got a little bit overdone. So from a trader's perspective, like that kind of price action.
Thank you, Tim.
You bet. Thank you, Angie.
It's closing time for this edition of First Business. Coming up on Monday, a motley fool will be here with the 5 companies that are outpacing Apple's revenue growth. Find out if those stocks are worth a bite. From all of us at First Business, happy Friday.